Now, before we meet tonight's special guest, let's take a look at one of the things he's going to be talking about, book value, a concept that, despite its name, has nothing to do with literary merit. The book value of a stock is quite simply the amount of corporate assets standing behind that share of stock. And in case you were scared by a balance sheet as a young child and have been avoiding the subject ever since, tonight we're going to show you how to figure out the book value of a stock. You start with the company's annual report. Up till now, you may have been throwing it in the wastebasket or just looking at the pictures. No more. Now you're going to head straight as Super Mouse to the balance sheet, where you will locate the figure for total assets, which, in the case of this fictitious company, amount to $9,700,000. From that, you have to subtract the intangible assets of the company, things like goodwill, the presumed value of patents and trademarks, and so forth. Figuring them at $100,000, we get $9,600,000 as the total tangible assets of this particular company. Remember that figure. Now we take the amount of current liabilities, the money the company owes on items like accounts, notes, accrued expenses, and taxes. To that we add the long-term liabilities, such as interest owed on the company's bonds, and the outstanding preferred stock, since both bondholders and preferred stockholders must be paid off when a company is liquidated before the holders of common stock can get a penny. All these liabilities come, in this case, to $5,800,000. So we take that figure and subtract it from the figure you've been remembering, the $9,600,000 in total tangible assets. The difference, $3,800,000 in this case, represents the company's net assets. And now, folks, we're in the home stretch. All that remains is to divide that net assets figure by the number of shares of common stock outstanding for this particular company. In this case, that's 300,000, which leaves you with $12.67 as the net book value per share of common stock. That book value gives you an idea of about how much each share might be worth if the company went out of business tomorrow. In other words, an approximation of the real value underlying the stock market speculation. Okay, now that you have become an instant CPA, what use might you make of this information?